do a couple hundred investments a year in seed. We think we can scale that up to potentially even double that. And the reason for that is very strategic. Seed investing is certainly the riskiest point of investing. There's less that's been proven. The trade-off of that is that you can invest typically at a lower valuation. The more investments you make at seed, the better opportunities you have for maximizing returns.
I think of it as like the top of a very large funnel. If we're in at the very first stages, once they get to Series A, B, C, we've been there the whole time, so we can continue to grow our percentage and also maintain our percentage, and also continue building that relationship with the company so they know the value that AV is bringing.
We start our investments sometimes in the single-digit millions on companies that we hope will someday be worth hundreds of millions or even in the billions. So our Super Angel Partner Program really got started as a way to connect into deal flow that we would not necessarily have seen otherwise.
We partner with angel investors to help share deal flow, and that's a really great way for us to get introduced to companies that are not necessarily on our radar.
We have around 50 super angels who share their deal flow with us. Many of them are entrepreneurs, founders themselves. Many have been investing for many years. Some are former or even current venture capitalists. The super angel, they are investing in the deal themselves. So our interests are aligned.
If we end up making an investment, we actually share carry with them. So there's a really great incentive for them to share great deals with us.
The Super Angel Partner Program is tied very much into our Alumni Ventures seed fund. By partnering with Super Angels, it gets us the opportunity to get into the earliest rounds of some exciting companies.
Our seed fund is actually quite large and extensive. We have anywhere from 50 to 75 deals a year. So we're pretty active, can be up to a deal a week.
A large portfolio is very important because of the power law effect, which essentially means that your winners have the opportunity to generate such outsized returns that they will more than make up for the losers.
We reserve 20 to 35% of the fund to really put additional and larger capital behind our winners, and we grow our investment over time once the business sort of demonstrates that they've hit key milestones.
The seed team is focused entirely on pre-seed and seed deals. We're all sourcing not just through Super Angels, but through our networks and our community.
We take a very diversified approach in terms of the sectors that we invest in. So we are investing in anything from healthcare to deep tech to fintech and SaaS. We also invest globally. So we've invested in companies out of China, out of Europe, out of North America. The minimum to invest in our seed fund is $10K, but we typically see investors putting in $50K or more.
Another strategy is also to invest over multiple vintages. So invest some capital this year and save some for next year as well. That's important too because tides change in venture. We've seen how different the environments have been for investors.